In today's video, I'm going to talk about one of the most famous and controversial investors in the world, Michael Burry. Assuming Burry bought the most expensive options of those listed in their article, providing protection for a 1 to 2% decline through November, his total cost would be $42.1 million. That's right, only $42.1 million for a $1.6 billion bet. That means that Burry's Big Short comes at a relatively minimal cost of approximately 2.5% of the value of his portfolio. So, why is he doing this? Well, we don't know for sure, but we can speculate. Maybe he's just hedging his other positions in case of a market downturn. Maybe he's part of a wider scheme with a longer-term goal. Maybe he's just trying to get some attention and publicity. Or maybe he's just wrong this time. We don't know, but we know that his current bets are not as risky or profitable as his previous ones. So, don't let the media headlines scare you. Burry's latest Big Short is not so big after all. But that's not all. There's more to Burry's story than just his bearish bets. In this video, I'm going to tell you what else he's doing with his money besides betting against the market. I'm going to tell you why he's getting out of regional banks and China. I will reveal to you what stocks he is buying and selling, how much he is investing in each stock, and why he is choosing these stocks. And I'm going to tell you how his investment record compares to the market average. So, stay tuned and watch this video until the end to learn more about Michael Burry and his bets. Michael Burry. You may know him as the guy who predicted the 2008 housing crash and made billions by betting against the subprime mortgage market. He was featured in the book and movie The Big Short, where he was played by Christian Bale. Well, guess what? He's back at it again. And this time, he's betting more than $1.6 billion on a Wall Street crash. That's right. According to securities filings released on Monday, Burry's company, Scion Asset Management, has bought put options worth $739 million against the Invesco QQQ Trust ETF, a fund made up of popular NASDAQ 100 companies like Meta, Amazon, and Nvidia. He has also hedged $886 million against the S&P 500 in put options. Put options are an agreement to sell assets at a fixed price on or before a certain date, usually indicating the seller has a defensive or pessimistic outlook on the market. So, what does this mean? It means that Burry is expecting a major crash in the stock market sometime soon. And he's not alone. Other prominent investors and analysts have also been warning that the market is overvalued and due for correction. But before you panic and sell everything, let me tell you something important. Burry's latest Big Short is not so big after all. In fact, it's quite small compared to his 2008 subprime bets. You see, the filings do not reveal what Burry's company paid for the options or when they will have to sell them. But we can estimate the cost of these options based on some assumptions and data from reputable sources. In addition to his bearish bets against the S&P 500 and NASDAQ 100, Burry has also been making some interesting moves with his other investments. According to the filings, Burry's fund is also getting out of its shares in several regional banks. It sold its 150,000 shares of First Republic Bank and holdings in Huntington Bank PacWest and Western Alliance. It's unclear whether these sales took place before or after JP Morgan Chase took over First Republic Bank in May. Burry also reversed course on Chinese stocks, selling his shares of JD.com and Alibaba in the second quarter of the year. This comes amid fears of contagion within the Chinese economy, which may be facing a property sector crash after the country's largest private real estate developer, Country Garden, sought to delay payment on a private bond. So, why is Burry selling these stocks? We can only guess, but maybe he's worried about the rising interest rates, the regulatory crackdowns, and the geopolitical tensions affecting these sectors. Maybe he's also seeing some signs of weakness or overvaluation in these markets that are not obvious to the average investor. Or maybe he's just taking some profits and reallocating his capital to other opportunities. We don't know, but we do know that Burry is not afraid to go against the crowd and make bold moves. But what is he buying instead? Well, it turns out he still has some faith in some sectors and companies. About 6% of his company's stock portfolio is long, and in the second quarter of the year, he increased his exposure to the travel and healthcare industry, purchasing shares of Expedia Group, ticker code EXPE, MGM Resorts with ticker code MGM, CVS, and Cigna with a ticker code CI. Burry also purchased $4.7 million shares worth of CNN parent company Warner Bros. Discovery and $3.3 million in online secondhand retailer, The RealReal. So, why is Burry buying these stocks? Again, we can only speculate, but maybe he's seeing some value and growth potential in these sectors that are not fully priced in by the market. Maybe he's also anticipating a recovery in travel demand, a boost in healthcare spending, and a rise in media consumption and online shopping. Or maybe he's just diversifying his portfolio and hedging his risks. We don't know, but we do know that Burry is not just a one-trick pony. He has a wide range of interests and strategies. But how good is he really? How does his investment record compare to the market average? According to an analysis by Sure Dividend, traders following the investments disclosed by Scion over the last 3 years, between May 2020 and May 2023, would have made annualized returns of 56%. Over the same period, the S&P 500 had annualized returns of about 12%. That's impressive. That means that Burry has outperformed the market by a huge margin. Of course, past performance is not a guarantee of future results. And Burry has also made some mistakes and losses along the way. In January, he tweeted, "Sell." By March, however, he had backtracked and said he was wrong to say sell. But it's hard to deny that he has a knack for spotting trends and opportunities that others miss or ignore. Before we delve into Burry's latest holdings and his investor profile, let's take a moment to get to know him better. Michael Burry is the CEO and founder of Scion Asset Management, a hedge fund that manages approximately $119 million as of Q2 2023. He is renowned for his knack for identifying undervalued and overlooked opportunities in the market and his willingness to take daring risks and go against the norm. Burry has a bearish outlook on the U.S. stock market, which he believes is in a bubble and bound to crash. He is buying put options on the S&P 500 and NASDAQ 100 indices, which gives him the right to sell these indices at a lower price in the future. He considers these indices to be overpriced and inflated by low interest rates, quantitative easing, stimulus checks, meme stocks, cryptocurrencies, SPACs, NFTs, and other forms of speculation. Burry is also warning about the dangers of inflation, debt, and currency devaluation. However, although he is betting against the U.S. stock market as a whole, he is also investing in some individual stocks that he believes are undervalued and have strong fundamentals. These stocks constitute his portfolio as of Q2 2023, which consists of 31 stocks with a total value of $119 million according to Stock Circle. The top holdings are Expedia Group Inc., EXPE 9.5% of his portfolio, worth $11.2 million, with 100,000 shares. Charter Communications Inc. Class A, CHTR 9% of his portfolio, worth $10.7 million, with 25,000 shares. Cigna Group, the CI 6.7% of his portfolio, worth $7.97 million, with 27,500 shares. CVS Health Corp., CVS 6.3% of his portfolio, worth $7.43 million, with 100,000 shares. MGM Resorts International, MGM 5.8% of his portfolio, worth $6.85 million, with 150,000 shares. Signet Jewelers Ltd., SIG 5.6% of his portfolio, worth $6.61 million, with 85,000 shares. Generac Holdings Inc., GNRC 5.2% of his portfolio, worth $6.17 million. Laredo Petroleum Inc., LPI 5.1% of his portfolio. Stellantis N.V., STLA 5.1% of his portfolio. Warner Brothers Discovery Inc. Class A, WBD 4.3% of his portfolio. These are the top 10 holdings of Michael Burry's portfolio as reported by Stock Circle. You can find the full list of his holdings and their performance on the website. As you can see, most of his stocks are in the travel, media, entertainment, healthcare, energy, and automotive sectors. These sectors have been hit hard by the pandemic and the lockdowns, but also have the potential to recover and grow in the post-pandemic world. Michael Burry is betting on these stocks because he thinks that they are cheap, resilient, and profitable and that they have a competitive advantage in their respective markets. He is also looking for stocks that have a strong balance sheet, a high free cash flow, a low debt-to-equity ratio, and a high return on equity. These are some of the criteria that he uses to evaluate stocks and find value in the market. He is not interested in overhyped, overvalued, or unprofitable stocks, such as Tesla, Netflix, Amazon, or Facebook. He is also not interested in stocks that are dependent on government policies, regulations, or subsidies, such as renewable energy, electric vehicles, or biotechnology. He is looking for stocks that can stand on their own feet and deliver consistent results regardless of the market conditions. He is also looking for stocks with a long-term vision and a clear growth strategy to create value for their shareholders. He is not looking for quick profits or short-term gains, but rather for long-term returns and compounding effects. He is a patient and disciplined investor who does his own research and analysis and does not follow the crowd or the media. He is also a contrarian investor who goes against popular opinion and finds opportunities where others see problems. He is not afraid to be wrong or to lose money in the short term as long as he is right in the long term. He is confident in his convictions and sticks to his principles. He is a visionary and a genius who sees things others don't. He is Michael Burry, one of the best investors in the world. The Big Short, initially a best-selling book published in 2010, told the story of the people who believed the housing bubble was going to burst, including Mr. Burry, who is thought to have made about $100 million from the crash. So, what do you think? Do you agree with Burry's bearish outlook? Do you think he's right or wrong? Do you like his other investments? Let me know in the comments below. And if you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content like this. Thanks for watching, and I'll see you next time. If you want to catch up on Loan's shareholder meeting, check it out on this next video. Click right here and enjoy.